So I want to first thank everyone for coming. I'll dive right in because I know the schedule is very precise. So there's a limited amount of time. WisdomTree, if you walk away with one thing about WisdomTree, for anyone not familiar, what we do is we build indices. The reason that's important is when we build the index, people frequently invest in all sorts of different ETFs. So the index is defining what the ETF is investing in. And if anyone is ever wondering, the performance is good, the performance is not good, frequently it comes back to the index methodology. So we do a lot of work, research, development to build these different indices. And we release products all around the world. If anyone is interested to see the ideas that we're putting out, I listed a link to my articles. There's a 30-person research team that I oversee. So other people are writing on other topics as well. We do a lot, not just thematics, not just AI. So certainly just wanted to put that out there. Now, if we start from the top, creating an index is a mixture of art and science. It's not yet the case that any firm that I have seen can do a good job at, for instance, using AI fully to define and build an entire index end-to-end, no human intervention, and you go from what you see on the page there, the total investable universe globally, more than 9,000 stocks, 67 trillion US dollars in market cap, a huge universe. And the task frequently is you have to go into a particular topic. It could be artificial intelligence, it could be another topic, but the key is what is the series of decisions that you undertake to get from all equities to the particular expression topic that you are looking for. And I listed out some of the things that we might use right on the page there. Some are very easy to access, publicly available. Others might start getting into more discretionary opinions and types of matters along those lines. Now, frequently people assume that everything is rules-based. If it's an index, it's rules-based. Everything is predefined. I was surprised, so I've been at WisdomTree since 2010, and I was surprised to know that the S&P 500, the most widely referenced and followed index probably in the world, is selected by a committee of people, which is a bit crazy. Now, I know this year's performance is defined by 7 companies, so you have 493 other stocks in there that people have added, but a committee of people define what is in the biggest and most widely referenced index in the world. And so if that index is defined by people, you can imagine if I'm talking about an AI index, which is obviously a lot more specific, a lot more niche, and we at WisdomTree use a committee of people to ultimately define what we think of as the ideal, at least up to that moment in time, index of artificial intelligence companies. So some of the things that we will think about, and I know certain companies are here, and I listened in on some of the chip maker sessions yesterday. I find chip making to just be such a fascinating area. Admittedly, did not study electrical engineering in college or graduate school or anything like that, but something that we think about in the group, because obviously every strategy, probably every thematic fund out there has NVIDIA in the strategy. So if you're putting NVIDIA in your fund, you're not doing anything to delineate yourself versus anyone else. But if you start thinking, look, the H100 chip or whatever chip is in the center, it doesn't just sit in space with nothing else. There's all these other components. And sometimes the other components, or sometimes the companies in Taiwan, because of a perceived risk from China and the geopolitics of that situation, sometimes there's differentiated things happening. The valuation in certain markets is lower or higher. The recent performance in certain markets is lower or higher. So if you're including more aspects of what we think of as the semiconductor value chain, you're getting a more differentiated experience, a differentiated fund, and possibly performance that is less dependent on any singular company. And in this case, the company that everyone looks to is probably NVIDIA, but at different times in the market, it has been other companies that have been sort of the behemoth, the 800-pound gorilla in the particular space. So thinking in value chains for certain aspects, particularly semiconductors, we found that to be fairly interesting. Now, another aspect that you can put into indices, some do it, some don't, is are you going to use a signal, a metric, a fundamental? Frequently the word fundamentals is thrown around to determine when you should invest or disinvest, sell, buy or sell a particular position. So what I charted here is the price to sales ratio on NVIDIA. It's obviously on the higher end of the range, let's say, for obvious reasons. So the question then becomes, is it appropriate? Because usually when these valuation measures are high, one signal that people can do is they can say, it's time to sell. The performance has already been experienced. I should take that money, redeploy into something else. And yet, you don't tend to see, at least in the AI investment universe, the AI funds, the AI indices, they all tend to keep NVIDIA all the time. None of us know what the performance is going to be, but the value of any particular signal, and the tricky thing about our business is sometimes price to sales will give you the exact right time to buy and to sell. It's low, you should buy. It's high, you should sell. But then in the next cycle, it might be a different fundamental. So if you've written into your index methodology, we always follow price to sales, that's no guarantee of getting into the position and out of the position at the right time. And so what's interesting and what we experiment with, but we don't really have strategies doing this yet, is there could be machine learning AI type systems that are mixing together different fundamentals, trying to find patterns, because whenever you're thinking of a decision, there's two sides. You have to get into the position and you have to get out of the position. And then you want to be able to do it on a consistent basis. You don't want to just get it right once. Now, if the trade is big enough, if it's a Soros trade of the pound in the early 90s, the trade is big enough, you only need it to happen once. But if you're managing a fund, you're thinking of a 3, 5, 10-year track record. And so making a good decision once, that's luck. Let's call it what it is. Making a good decision time and again for 10 years, now we're getting into something that is more and more skill-oriented, predictable, something that can potentially add value over time. Now, there's so much information that you think might help in terms of getting us access to a particular topic, in this case, AI. I showed one example here. Arbix is something that firms, financial firms like WisdomTree can pay for. They can pay a lot of money to FactSet. And as a result, this system will give you estimates of revenues per business line, fairly detailed. So we see the Amazon example there. And it's describing different lines of business that Amazon has. And then what's the percent revenue coming from each of those lines of business? And you can use this. There are whole strategies out there where they basically say, here's the topic, and the reason the companies are in there is because of this system, Arbix. So you're using revenues from a database to ultimately determine what companies are representative of that topic. Because unfortunately, none of us as yet can go to a Bloomberg terminal or a FactSet terminal, type in artificial intelligence, and we get a nice tidy list of 50 stocks. That doesn't yet exist. You can get semiconductors, that's a GICS sub-industry, but you can't necessarily get directly to AI or cloud computing or a lot of these other topics easily. And so that's why there are firms out there paying a lot of money to databases like Arbix, but similarly, people can look at patents, they can use natural language processing, they can look at capital expenditure. There are all these details that can be used to ultimately delineate, is this the right way, the right company, the right representation of a particular topic. So patents was a big one. There was a company, YEWNO, Y-E-W-N-O, that unfortunately went out of business within the last year or so. But what they used to do, and when we were launching our AI strategy in Europe, we were coming up against this concept of if a company has a lot of AI patents, it should be in the index. And our argument, so when we would go into client meetings, financial professionals, people with money, that we're trying to convince to invest, we would say, look, patents, and we see a graph of companies and the change from 2017 to 2021 and Tencent, Baidu, et cetera, going down the list. So we see some of the companies with the most AI patents in the world as of 2021. But our argument was it's useful to a point, but it's not necessarily telling us, well, are these companies fully commercializing the activity? Because what we want within our investment is we want companies that are commercializing the activity, making money off of the artificial intelligence product or service. Because if their returns are good, we want it to be because the AI product is working. We don't want it to be because, well, some other thing is happening in the market and they hold a lot of patents, but they don't do anything with them except sue other companies that try to undertake those activities. And so there's no, as yet, we found, perfect measure. You want to be aware of patents, but patents alone do not tell you the full story, at least in our opinion. Now this, admittedly, the text is a bit small, but what we also looked at, and you want to be sensitive to it. So what companies are announcing these days, all these companies except NVIDIA have recently announced earnings. And the big thing that companies are tracking is they're tracking what's the pace of capital expenditure. It's news when Microsoft is pushing towards $50 billion per year in capital expenditure to keep pushing generative AI solutions and Copilot and all these interesting things. Meta going out there, continuing to increase capital expenditure beyond, obviously, the metaverse and that kind of stuff. Ultimately, capital expenditure is important, but there's not a lot of detail. These were from different 10Qs and 10Ks, and there's not always a ton of detail that you can get on exactly what the capital expenditure is going towards. It's great to see a big number, but it's not always clear, okay, these dollars are going to this initiative and those dollars are going to that, if you're beholden to simply what the companies report to the public markets. And so it's another example of you're taking in the information within the committee, sensitive, trying to learn everything you can, recognizing, again, there's no perfect source. And then similarly, different parts of the AI ecosystem will tend to do well at different times. Maybe now it's a time where the picks and shovels, companies like NVIDIA, and maybe when they launch their new chip, Advanced Micro Devices and some of the others listed there, are going to do well in the near term. But then you're going to see a transition to phase 2, possibly then a transition to phase 3, because what the market is getting excited about in terms of the actual hardware and software being provided, it's not going to just sit at the same level. We're not going to be equally excited about ChatGPT forever. It was incredible in November of last year. Now it's sort of the baseline for a foundation sort of language learning model. And everybody's thinking in the future, there's going to be something new, something next. Robotics in past years, many indices and strategies, what you see is they'll have robotics in the name, they'll have automation in the name, because at different points in time, what was hot when the fund was being launched, people want to put that in the name. Robotics hasn't been, at least in the ETF world, it hasn't been talked about anywhere near as much in recent years as it was, say, in 2017 or 2018. And something else that happens is certain companies that could not have been more exciting, whether it's LegalZoom or Wix and Squarespace or Five9 or TripAdvisor, what happens when large language models come out is it changes what is viewed as good or worthwhile in terms of the software that they're providing. For instance, Wix and Squarespace make it easy for people to design web pages. But if essentially a large language model can automatically translate natural language into whether it's HTML or Java or all these other things, the value of a software provider that was making it easy to create a web page, now maybe you can use Bard or GPT-4 or whatever it is, and it instantly get all the code that you need for a much lower price. You don't need to subscribe to these software as a service platforms. So they have to change ultimately how they deliver their business model and their service. Now, when you get into indexing, one of the most important things, and if you walk away with anything from this talk, if you're going to make an investment in an ETF, please look at the top 5 or top 10 holdings, because these are two real indices that are out there supporting actual investment products. And we see NVIDIA is the top weight in each, but it's a very different forward-looking experience if you're starting at a 12% weight to NVIDIA versus a 5% weight to NVIDIA. And so, again, the 12% weight to NVIDIA, if they blow out their earnings in the coming weeks, that could be a phenomenal investment. But at the same time, a lot of people that we speak to, they don't necessarily want a portfolio that is ultimately so defined by the performance of one stock, one company. So you learn a lot about an index's methodology from looking, again, at the top 5 or top 10 stocks. And similarly, you learn a lot looking at how many stocks overall are in a given portfolio. So you see the WisdomTree index kind of in the middle, 77. It's neither good nor bad if there's a low number or a high number. You just want to know, why is it? What is the approach that is defining how many stocks should be in there, how broad? Because if there's less weight per company, maybe that's good. You're more diversified. But similarly, you're not taking as big bets on particular topics. The final point in the final minute or so, China. In 2018, when we started our AI journey of providing investments, we were very excited because it was very clear, and it remains clear, China and the US are the companies or the countries spending the most money, making the most effort to advance AI. And since 2018, there have been various sanctions and rules and other delineations. I'll be honest, internally within our committee, we've decided not to put any Chinese companies in the strategy. One of the reasons is the US puts out all these lists. So there's the non-SDN Chinese military industrial complex companies list. It's a bit of a mouthful, but what it means is you can't invest in these companies. So as an index provider, if you had those companies in there, and then the US puts them on this list, you have a headache now. Because you're needing to sell into a market that almost doesn't exist because nobody else can buy them. And it's very similar to what happens when Russia attacks Ukraine. And so there are certain geopolitical risks that you almost have to be sensitive to and reflect within your given index strategy. And so with that, I see that it's the end of time. The final point I'll leave you with is, come to WisdomTree's website. We put out a lot of information, not just on AI, but all sorts of thematic topics. This is a real depiction for the first 5 months of the year. What are people really investing in? So you see a lot of semiconductors, AI, robotics. That it's changing all the time. We're updating it every month. But with that, I'll thank everyone and have a great rest of your day.